Today, crypto changed forever. Not because Bitcoin crashed, not because XRP pumped, and not because somebody launched another meme coin. Today, Europe forced the crypto industry to make a choice: comply or leave. Welcome back to the channel. I'm Paula. And if you've been away from crypto over the last week or so, you've picked a fascinating time to come back. While most people have been watching prices, one of the biggest regulatory changes in crypto history has quietly come into force across Europe. It's called MiCA, the Markets in Crypto Assets Regulation, and for the first time, crypto companies across the European Union are expected to operate under one common rulebook. Now, I know what you're thinking. Regulation doesn't exactly sound exciting, but I actually think that this story is far bigger than a new set of rules. I think this marks the point where crypto begins moving from an industry built around speculation into one that's becoming part of the global financial system. And if that's true, the companies that thrive over the next decade may not be the ones with the biggest communities. They may be the ones that prepared for this future years ago. To understand why this matters, we need to go back to where crypto started. When Bitcoin launched in 2009, there were no crypto regulations because there wasn't really a crypto industry. Governments didn't know what Bitcoin was. They didn't know whether it was money, property, a commodity, or something completely different. Then Ethereum arrived, stablecoins arrived, exchanges appeared all over the world, billions of dollars flowed into digital assets, but regulation never really kept pace. Every country made its own decisions. Some embraced crypto, others tried to ban it, many simply ignored it. For a while, that actually worked. Crypto was relatively small, and regulators were happy to watch from the sidelines. But then the industry grew into trillions. As it grew, so did the failures. We had Mt. Gox, where hundreds of thousands of Bitcoin disappeared. We saw Terra Luna collapse, wiping out tens of billions of dollars in value almost overnight. Then came FTX, one of the biggest financial scandals crypto has ever seen. Those events didn't just cost investors money, they changed the conversation in governments around the world. The question stopped being, should we regulate crypto? It became, how do we regulate crypto? And that's exactly what Europe has now tried to answer. So, what's actually changed? One of the biggest misconceptions is that MiCA regulates Bitcoin itself. It doesn't. You can still buy Bitcoin, you can still hold XRP, you can still invest in Ethereum. MiCA is mainly about the companies providing crypto services. If an exchange wants to operate across Europe, if a company wants to issue a stablecoin, if a business wants to custody digital assets on behalf of its customers, they now have to meet a common set of standards. Think of it like getting a passport. Instead of applying for permission country by country, firms can apply under one framework that allows them to operate across much of the European Union. That creates clarity, but it also raises the bar. For years, one of the biggest advantages in crypto was speed. Launch quickly, expand quickly, list more coins than everyone else, move into as many countries as possible. Now, the competitive advantage could look completely different. Being licensed, having strong banking relationships, meeting capital requirements, demonstrating proper custody, showing regulators that customer assets are protected. That might sound boring compared with meme coins and price charts, but if you're a bank, an asset manager, or a pension fund thinking about entering crypto, those are the exact things that you want to see. Institutions don't invest billions of pounds into uncertainty. They invest where the rules are clear. And that's why I think MiCA matters so much. Not because it tells retail investors what they can buy, but because it gives large financial institutions a clearer legal framework to work within. Now, does that mean that everyone's celebrating? Not at all. Some companies have spent years preparing for regulation. Others are still trying to catch up. Binance is probably the best example. It's still the biggest crypto exchange in the world, but we've seen regulatory hurdles in Europe as it works through different licensing requirements. That doesn't mean Binance is finished, far from it, but it does show that size alone isn't enough anymore. Even the biggest players have to satisfy regulators. For smaller exchanges, the challenge could be even greater. Compliance costs money, legal teams cost money, reporting requirements cost money. Some businesses will decide that Europe is worth that investment, others may simply decide to focus on different markets instead. That means MiCA isn't just changing regulation, it's changing competition. Now, let's bring Ripple into the conversation because I think this is where things get really interesting. For years, Ripple has taken a very different approach from much of the crypto industry. While many projects focused on decentralized communities and rapid growth, Ripple spent years building relationships with banks, payment providers, and regulators. It's been collecting licenses around the world. It launched RLUSD, its own regulated stablecoin. It continued expanding its payments business. And recently, we've seen progress towards operating under Europe's MiCA framework as well. Whether you're bullish on XRP or not, it's fair to say Ripple's strategy has always been built around working with the financial system rather than trying to replace it. If regulation becomes a competitive advantage, that's a very different conversation from simply asking whether XRP is going up or down this week. But this isn't just a European story. When you zoom out, something much bigger is happening. Europe has MiCA. The United States is moving towards supporting private stablecoins while politicians continue pushing back against a retail central bank digital currency. The UK has just softened parts of its own stablecoin framework after listening to industry feedback. China continues developing the digital yuan. Four major economies, four completely different visions for the future of digital money. The race isn't just about crypto anymore. It's about who writes the rulebook for the next generation of finance. That's why I don't think today's story is really about regulation. It's about where the industry goes from here. Supporters of MiCA argue that regulation is exactly what crypto needs if it wants mainstream adoption. They believe banks, asset managers, and global payment companies need legal certainty before committing serious capital. Critics see it very differently. They argue crypto was created to reduce dependence on centralized institutions, not become another branch of traditional finance. They worry regulation increases costs, reduces innovation, and makes it harder for smaller companies to compete. Both sides make valid arguments. And the truth is, we don't know who's right yet. We'll find out over the next 5 or 10 years as we see which regions attract investment, which companies grow, and whether institutions finally embrace digital assets at scale. But I think one thing is already clear. For 15 years, crypto kept asking whether governments would regulate this industry. That question has now been answered. The more interesting question is this: which companies have actually been building for this future all along? Now, before I go, if you're interested in learning how Milkshake, Matty and I automate our own trading, we've put together a completely free 30-minute TradeBot Pro course. It takes you from beginner to having signal bots connected to your exchange in around half an hour. And you'll also get a 14-day trial so you can try everything for yourself. You'll find the link in the description. If you enjoyed this video, don't forget to hit like, subscribe, and let me know your thoughts in the comments. Has Europe just taken crypto into its next chapter, or is regulation taking the industry too far? Thank you so much for watching, and I'll see you in the next one.